you want to find capital, you just move the L to the where the A is to subtract. So it will be like A minus L is equal to C. That's what we are talking about. So C becomes A minus L.
Hey everyone, my name is Beaches and I'm with the Finance and Accounts Department of Wilmar Africa Limited. If you are looking to improve your accounting skills or just learn more about finance, I highly recommend checking out KS Tutorials, a new accounting channel on YouTube where they have great content that breaks down complex topics in an easy to understand way. Plus, their videos are really engaging. Don't forget to like, subscribe and share with anyone who you think can benefit from this. Happy learning. KS Tutorials, keep calm. KS Tutorials, balance on.
Hello guys, welcome to another episode of KS Tutorials. You keep calm and then you balance on. Keep calm and then balance on. On today's episode, we'll be talking about the accounting equation. The accounting equation. What is accounting equation? Accounting equation is where we add our liability and our capital to get our assets. In mathematics, we have equation to be x is equal to y plus, let's say, p. This is equation. We have different types of equations, but this is a simple linear equation. So in accounting, let's say if you want to change, then this will be our asset. So when we add, and then this will be our liability plus our capital. So when we add our liabilities and our capital, we are getting our assets. That is the accounting equation. And then this accounting equation is what is used to prepare our balance sheet or our statement of financial position. So our equation is used to prepare our balance sheet. Okay, so let's explain the terms of the equation. You might be wondering what an asset is. You might be wondering what a liability is. You might be wondering what a capital is. Okay, so our assets are economic resources. They are economic resources that is owned by a company and also gives economic benefits. They are economic resources of a company which is owned by an entity and also give economic benefits. So anything in the company that is owned by the company, it is owned by the company and then can give economic benefit, is an asset. So when we go to an entity, we have cars. They are owned by the company. The cars are owned by the company. And then when you sell the cars in future, you get economic benefits, which is cash from it. So it's an asset. When we have something like the building, it is owned when the building is owned by the company and then can generate money for the company. Or can generate benefits for the company. It's an asset. The goods that the company trade in, when they sell it, they will get economic. So it's an asset to the company. So these are assets. And then when we talk about liabilities are the owings of the company. The owings of the company. Let's say how much a company is owing. So if a company is owing an entity, they are the liability. So when a company purchases goods on credit, the company is owing the supplier. So meaning that the company has a liability of that amount. Do we get it? So that's also liability. And then capital. Capital is the amount of money the owners of the company invested in the company. So that's capital. The amount of money that the owners of the companies invested in the company. So in my book, I have an asset to be business assets. Business assets are economic resources owned by the business enterprise. Which gives economic benefit, or it gives benefit to the company. That's assets. And then I have liabilities to be amounts owed by a firm outside the company. And then equity is the economic resources supplied by the owner of the company. So as I said, so the assets, liabilities, and then the capital. That's the definition for it. So when we talk about the accounting equation, so let's say you have an asset worth 10,000. When you add your total liabilities and the capital invested, you are supposed to arrive at this 10,000 that you have. You are supposed to arrive at the 10,000. That is what we term as the accounting equation. That is what we term as the accounting equation. So it's very simple. When you add your liabilities, your total liabilities and your total capital, you are supposed to arrive at your total assets. You are supposed to arrive at your total assets. Thank you. So now we talk about the balance sheet. Balance sheet. I said we use this to compute the balance sheet. What then is the balance sheet? What is balance sheet? So the balance sheet comprises of assets, liabilities, and equity or capital. The assets of the company, the liabilities of the company, and then the capital. So the balance sheet. A balance sheet is a financial statement of balances of assets, liability, and capital as at a particular date. At a particular date. So let's say as at 31st December, the balances of our assets, the balances of our equity, and then the balances of our liabilities will give us our balance sheet. So the balance sheet formula or the format is like this. We have the assets at this side, and then we have our liabilities, and then our capital. Two at the credit. So we have the liabilities and the capital at the debit side, and then we have our assets at the credit side. That is a T table, the T format. If you want to use the tabular format, do we get it? Do we get it? Thank you. So this is the balance sheet equation, the accounting equation. Asset is equal to liability minus or liabilities less your liability plus your capital. Asset is equal to liabilities plus capital. Thank you. So you want to know the relationship. Between the assets and then the liability. What is the relationship between the relationship between asset, liability, and capital, and then the balance sheet? What is the relationship? So the relationship is that the balances of these items, the balances, so the balance of the total assets, the balance of the liabilities, and the balances of our capital will sum up to our balance sheet figure. And then the balance sheet also tells us or shows us the economic position of the company at a particular date. The balance sheet also tells us the financial position of an entity at a particular date. So through this particular formula or the equation, through the equation, we can find our capital. Let's say the business is operating, and then you want to know the capital of the owner. There's a small provision shop. That you want to know how much the person invested in the capital, in the business. We can use this accounting equation to find the amount invested in the business. How do we do it? We have steps to follow. So first we have to identify our assets. Asset identification. You need to identify the total assets of the business. So the provision shop, the items that are being sold, the stock. We need to find the total assets, the person's physical cash, and then the worth of the store. Everything, that's the asset. You need to quantify everything. So that's, if you're able to quantify that, you have the total asset. So the second point is you need to identify our liabilities as well. We need to identify our liabilities. So when we know our assets and then we know all our liabilities, we know our assets, we know all our liabilities, Then we can subtract, right? We can subtract our assets. Can subtract our liabilities from our assets. So when we take our liabilities from our assets, whatever is left is our capital. So this is the equation. So let's say A is assets, B, L is for liability, and then C is for capital. So you have assets is equal to liabilities plus capital. So you have this equation. This is the accounting equation. So if you want to find capital, you just move the L to the where the A is to subtract. So it will be like A minus L is equal to C. This is what we are talking about. So C becomes A minus L. Please, you will get it. C becomes A minus L. So if the company, the company's liabilities, all their owings, whether they took loan, whatever to run the business, everything, all of them. And then you take the liabilities from the assets, you are getting the capital. So this can help you to know the amount someone invested in his shop, how much someone started his business with. That is it. That's the accounting equation. So I have examples here. I have some examples here. So it says Kofi sets up a new business. Before he actually sells anything, he has bought motor van, 2,000 Ghana cedis, premises, 5,000 Ghana cedis, and stock of goods, 2,000 Ghana cedis. He did not pay in full for his stock of goods and still owes 1,000 Ghana cedis in respect of them. He had borrowed 4,000 from Sami. He has also 3,000 cash in hand and 1,000 at the bank. You are required to calculate the amount of capital invested. So you want to know the amount of capital that he invested. So he bought motor van without selling any goods. He bought motor van. So he doesn't have sales. He just bought motor van. So if you are going by this format, let's go by this format to find our capital. Let me leave this one here. Let me clean this side. Okay. So let's we need to identify the assets. Motor van is an asset. So he bought motor van. Premises is an asset. We know that stock is also an asset. That cash in hand and cash at bank are all assets. So we need to find the total assets. So we have motor van. So let's do it. Assets. Motor van. Premises. Let me check the amount. So motor van is 2,000. Premises is 5,000. So motor van, we have 2,000. We have premises 5,000. We have stock 2,000. And then we have cash in hand. And then we have cash at bank. So cash in hand is the physical cash you have with you, and the cash at bank is the amount you are keeping at your bank. Do you get the difference? So then they are saying that the cash in hand is 3,000 and the one at the bank is 1,000. So you have 3,000 and then 1,000. So you have to find our total assets. You have to add the 3. So you are getting 7, 9, 10, 12, 13. So our total assets will be 13. I put it here, 13,000. Now we have our total assets. We have our assets here, 13,000. The next point is to identify our liability. You have to identify the liability. So in the question, they said he borrowed 4,000 from Sami. He borrowed 4,000 from Sami and also owes 1,000 in respect of goods. So we have borrowing from Sami, that's loan from Sami. And then we have, so loan, so liabilities, let me write liabilities, loans from Sami, that is 5,000. Is it 4,000 or 5,000? 4,000. And then we have creditors, because he was owing 1,000 worth of stock. He didn't pay his suppliers 1,000 Ghana cedis. So that 1,000 Ghana cedis, the total will be 5,000 Ghana cedis. And then we are lessing it. So when we take our liabilities from our assets, asset minus liability, that will give us capital. Capital is equal to asset minus liability. Asset minus liability will give us capital. So when we take our assets, our liabilities from our assets, we are getting 8,000 here as our capital. So meaning the owner of the company started the business with 8,000 Ghana cedis in hand, 8,000 Ghana cedis as his capital. That's what he started the business with. That is what he started the business with. Do we get it? That is what he started the business with. So this is the accounting equation. Very simple. If you don't understand anything, just comment, tell us, and then we are coming to you. We will explain it again. Our aim is for you to understand what we are doing here. We want you to appreciate what we are doing here. Do we get it? We want you to appreciate and then understand every bit of what we are doing here. Okay, so now that we have this 8,000, let's say we want to prepare our balance sheet. Let's say we want to use it to prepare our balance sheet and see that yes, what we are talking about actually works. Okay, so if you want to prepare, if you want to prepare our balance sheet, let's use the T format. If you want to prepare our balance sheet, then we have the T, assets here, then our liabilities and capital here. So let me do L plus C. You understand that it's liabilities and capital. Then in Ghana cedis, it's supposed to be equal. Our balance sheet is supposed to balance. So our assets, land. We don't have land. We have motor van. The motor van is giving us 2,000. We have premises, which is giving us 5,000. And then we have stock. Stock is also giving us 2,000. Then we have the cash. The cash is giving us 4,000 because cash are hand and cash in bank. 4,000, so added it. So we had 13,000 here. Okay, so let's say our liabilities. We have loans. Our loan amount is 4,000. And then our creditors amount is also 1,000. Then we have our capital. Our capital is also giving us 8,000. When we add it, we are getting 13,000. So you see that our balance sheet has balanced. Asset is equal to liability plus capital. That is our balance sheet. So this is the balance of assets, the date. Let's say today is 16th or 20th or whatever date, January 2025. So this asset is a value. This also are liabilities and capital amounts. So do we get it? Okay, so continue to subscribe to our channel. This was a brief session. We didn't want to waste time. But if you do not understand, you can comment and then we will know how to help you out. Thank you for listening to us. Continue to subscribe, continue to like our videos, continue to comment, and then we'll you will always appreciate accounting. Thank you for staying with us. KS tutorials, keep calm. KS tutorials, balance one.
Hi guys, keep watching KS tutorials. They're the best.